Good morning and welcome to the B.F. Anderson Technical Report for February 21st. Been an interesting week this week. It's been a fairly good week. We said last week that we're leaning bullish. However, I also say, and it's very important to understand this concept of taking the portfolio and the market a day at a time. So if you look at where we are today, I would have to say we're becoming more bullish this week than we were last week. So a little bit more than a lean. So here's the NASDAQ. As we always start out with the NASDAQ, we got our low. We're in an uptrend. Moving averages are going in the right direction. Only point I would make is that this rally has been on somewhat light volume. It has not been above average volume, but so far so good on the NASDAQ. Now, if we also look at the weekly chart, something new here, we have now broken above the 35-week moving average. Now, the rule is that if by Friday, meaning tomorrow, if we're above the 35-week moving average, which would be 2 weeks in a row, 2 consecutive weeks, that is a buy signal. Again, the weekly volume is not extraordinary, but the trend is good, and so far so good on the weekly. Now, on the advanced decline line, now remember what we're doing here. We are looking at the number of advancers versus decliners, and we're getting a net number. So you can see that for the week, we just had really a very solid situation where more stocks are advancing than declining. The most important thing about the advanced decline line is the direction of the line, which is clearly in an uptrend. So advanced decline line does look good. We did get the blast off indicator at the beginning of the year, which is this in here, mainly this activity here. Blast-off indicators usually lead to higher prices. Now, the high-low index, again, we're taking the number of new highs divided by new highs plus new lows. Actually, a blast-off again. We're not really seeing any new lows in the market. We're seeing a lot of new highs, and the reading is getting a little bit frothy. That's just one note of caution. As you can see here on the New York Stock Exchange, we only had 4 new lows yesterday. You can see that since the beginning of the year, the number of new lows has completely dried up versus last year, which is a very positive sign. Now, I think this is the most important news of the week. We are now above on the 10-20, which is the 10-month moving average versus the 20-month moving average. We are now above the upper moving average, and the upper moving average has turned up, so we're back in an uptrend. The market is in an uptrend. Could mean all-time new highs. We don't know, but anytime you get a good, solid white space in between the moving averages, that's pretty strong. Now you can kind of see here back in 2015, 2016, things got real choppy. That really wasn't what we were looking for. So it does look like to me that the 10-20 is signaling a resumption of the uptrend. Now here's the only real negative right now. We got into extreme fear back towards the end of the year. Now, this is the put-call ratio. This is where we're measuring where institutions are hedging their portfolio using options, and when they get real defensive and real fearful, you're going to get readings up here in this area. Well, we're back into greed, so just a note of caution. The last time we got down in this general area, that triggered a correction. So we may be having a correction here. We'll just have to see. Like I say, take it a day at a time. Now, I have a good friend who did a very interesting study. Went back to the 1950s, identified 21 times that we've had this V-bottom type of pattern. Then he also took at the same time, we've got a measure of the 100-day moving average versus the 200-day moving average. 81% of the time with this pattern, the market has retested the lows. Well, 81% is not 100%. And, we are talking about history here. Sometimes history repeats, sometimes it doesn't. But the most important thing to note here is that of these 21 studies, if the positive outcomes came was when you did get the cross. However, if the 200-day stayed flat and then starts to turn up, that usually has a good outcome. And so right now with this particular study, I would say it's leaning towards the bullish camp. Now, one other important point. Now, we've talked about this index before. This is the Value Line Geometric Index. It's a 1,700 stock index. It's equally weighted. It's not market cap weighted. So it really measures the average stock. Well, there's two things to note here. One, we've been stuck in a trading range since 1990, over 20 years. So the average investor is very, very frustrated because the average stock really hadn't done anything. Well, finally, around 2016, we broke out of this range for the first time and rallied to all-time new highs. Then we got the correction last year, pulled us back into the box, but we held the trend line. We're still in an uptrend, and the good news here is that we have retaken the breakout. So it was looking like a failed breakout. Now it's reversed. This index is looking much, much better. So let's get into the top 5. Here is it's really amazing what's dominating the list right now. One thing that is kind of dominating is biotechnology. You can see this is Array Biopharmaceuticals. The stock hit an all-time new high. The biotech stocks are considered the riskiest portion of the market. It is risky stuff. I mean, you really have to admit, these drug tests or these studies that they do, if they go bad, the stock can just collapse. So when you see major buying going on in this group, it's kind of telling you that the market is viewing the concept of risk on versus risk off. Now, again, we're seeing a dominance of software stocks. This is ServiceNow. Again, the stock broke out on earnings on very heavy volume, hit an all-time new high. Slight pullback this week, however, still looks good. Twilio, we own this stock. It's been very good to us. This is an interesting company. We actually bought a second company called Zendesk. These guys are involved in new ways to communicate through web pages. It's just really, to me, a very interesting area. Well, you can see that the stock, they announced earnings, got a pullback, stock stabilized right at the 25-day, and is now rallying again. The earnings, by the way, came out excellent. In fact, they're making their first profit since they've been a public company. Here's another software company very similar to ServiceNow called Workday. We also own this stock. It's in a very nice uptrend. This is really the most interesting story. This is Xilinx, hit an all-time new high, broke out on an earnings announcement. The reason the earnings were so good was that they're selling chips for the infrastructure of the 5G network. So let me tell you a little bit about 5G real quick. If you have a 3G network, which is in the past, a 2-hour movie took 26 hours to download, whereas when you went to 4G, a 2-hour movie took 6 minutes. With 5G, it will take 3 seconds. This is going to be a very big deal. Now, the other thing to understand about 5G is the tower configuration is going to be very different. You're going to still have the big towers where there'll be the transmitters. They're going to be reconfigured. Actually, we've also followed some of these tower stocks. They're doing well as well. And what's happening then is the big towers then shoot signals to towers that will be on top of buildings and all over the city or all over the area that are 1,000 feet apart. So if you really think about it, that's going to require a lot of network gear, and it's going to require a lot of semiconductor chips. And Xilinx is in the business. So if you have any questions, give me a call. Things are looking much better. Take it a day at a time. And today I would say we're bullish. Thank you.